Today we had some kind of decent price action, to be honest. It was a distribution day, so I was expecting a big movement, but that ended up happening much earlier than open after this 15-minute CISD. And it was a little hard to read for the cycles on the day. I knew it was distribution, so it was likely going to be volatile like it was, but not in the New York session. Mostly in the pre-New York session or even London, really. So let's review the daily cycles first, and then we'll get into the executions because there is one win, one loss that I tried to make up some profit to pass the combine, an early entry, and then the same entry for our 10 a.m. PO3, which I ended up taking for most of the profit, which was actually three cons. So imagine if it was more cons because I did not take, two small losses. But let's start with the daily cycles, and then we will get into what I saw for the day. So the daily cycle is hard to read. I'm gonna be so honest. XAMD is what I saw because of ES, and it's lagging, and I don't know why. But right here, all-time high was swept True Week Open, which is, all-time high was after True Week Open, but it is still sweeping that high, and so that is a significant high, especially if we're in distribution day and we need something to distribute to. It looks like we're going lower because if you look on the Dow, YM is just nowhere near it, and in fact, it hit CE and it went lower because CE of this entire range is right at this 4 hour midpoint. It's exactly right there. So I expected, especially because I want to mention this first because regular trading hours, people just sleep on it, and I mention this all the time, and some people just aren't going to listen because they don't want to switch to the chart. But regular trading hours, just look at this AMD profile. And it's not even AMD, it's just a market maker profile. Here we have manipulation, distribution. Look at that, and that's the 30-minute candle. That is our single 30-minute candle. Or sorry, that's actually a 15-minute candle. But look at this. Regular trading hours high. We have that SMT with ES. That is a weekly cycle on the regular trading hours, technically speaking. And our target, which we're going to talk about, is this low. It's the recent low. It does not need to be this low for this reason. We already took it and made a weekly cycle on YM. Like we've already swept this new weekly opening gap low. So low of week technically does not need to be touched because there's a weekly cycle in play. And at the moment, we just reswept that on ES. So we're likely to move higher at the moment. Anyway, moving to the regular trading hours because electronic is important, but we are taking our trades. Sorry, regular is important, but we are taking our trades on the electronic trading hours because we have more data. So looking at this, I want to make this clear. The 15-minute CISD is the high time frame. This aligns with the daily. Like after this 1 hour IFEG right here, after this, I was looking for a 15-minute CISD, which was really before that. So this 15-minute CISD gave me confirmation that we are probably just going to move lower, not just create a retracement, because if we're creating a retracement, then we wouldn't have a high time frame market structure shift or CISD, like I said, the 15-minute. This happened on ES a bit later. It happened at 9:15, but pre-market on NQ, it was at 9 o'clock. So it was a little bit earlier, and I didn't want to trade it because I did want to wait for market open. And that PO3 ended up dumping. So let's go to the 1 minute and let's check out the executions. So this is market open right here. 30-minute PO3. We just need to look at NQ at the moment. 30-minute PO3 opens, dumps down. And what am I looking for? I'm looking for a sweep in Asia. I'm also looking for a microcycle to verify this right here, this distribution in manipulation. So since we have distribution in the 90 and the microcycle, I'm willing to trade the PO3, but not to a high time frame target. So what did I do? I entered right here after this microcycle was formed, after the 30-second fair value gap. Right here was moving up higher. I intuitively just wanted to enter right there. I don't know if there was something on the 15-second. There's not, just this break of structure from the 5-minute swing divergence, which was also just the microcycle. Right here, the swing divergence with ES. Since it was with ES, I wanted to take that because it looked like a protected low for at least the 30-minute. And what I did was I targeted this high, but I ended up exiting early, and I'll tell you why, because the regular trading hours gap was rejecting. And I was looking at the range of this, and I'm like, this is CE. I don't even think we're gonna go any higher than the first presented, to be honest. So I exited there. That was an $800 win, 7 contracts. I pyramided 2 on the second entry, which moved up my trade to here. So I was break even. I didn't want to get stopped out on this because we were in sizing more and we were trading for profit because I'm passing combines. So I took that trade. After that, I did want to make a little bit more profit because we have the volatility. We have good price action at the moment. So I wanted to see if I could catch a continuation. That was impulsive. I had just wanted to enter. I entered 5 cons and I had to stop right here. I lost like $250. And this trade was really something that I would like. This was going to pass the account right there. That was going to pass the account. I think it was actually 4 cons. I think it was, yeah, because the volatility was crazy today. I mean, that's 30 points right there. So yeah, it was 4 contracts. And I lost that trade. This would have passed it, which is like barely reaching into the OTE of our 30-minute PO3. I thought that was likely at least, but we rejected the first presented. And after that, 10 a.m. was open. So this dumped down solidified the fact that we are moving lower. And what I was looking for after that was the 5-minute to get tapped because I'm just looking for entry criteria to enter short. I need a safe stop, which we'll get into. That microcycle was a safe stop. This gap right here, this 5-minute gap between this candle and here is what held the rest of the short move until my TP, which was the regular trading hours low, the most recent regular trading hours low. And that right there was all that I needed to give myself an entry, and a really good entry at that. Because the gap is, when the gap is small on the higher time frame, then the entry is like, it's almost free. And I was looking on 3-minute as well. We were trading into this. We created a large gap for that. And what I was waiting for was that 5-minute to get swept. And I entered prematurely, for one, because this fair value gap got tapped on ES. So we did technically have, we did have a little SMTF right there with this candle on ES. But I ended up closing pretty close to where I exited. This was also for 4 contracts. So right here, the short position got exited for, yeah, like right there. 4 contracts. It wasn't that much. It was like a little over $100, I think. I was down $300 from this win with these 2 losses. And I just was impatient, right? This microcycle wasn't even made yet. So this was an impatient trade. I decided to close it because I didn't want to hold in drawdown while it was confirming to go down. Well, I knew it was going to go down. I knew the microcycle was likely to be made after this break, and it was just moving higher and higher into the OTE. And also at this time, if you just look at the regular trading hours on ES, look at this sweep. Actually, here, we gotta move this out of the way. But look at the sweep. We swept all of the highs of regular trading hours, of market open, really. So after this sweep, right there on ES, it is now the right time for us to move. So this microcycle is very important because it's regular trading hours high. It's the market open high. It's when the orders are flowing. Like, you saw the drop that we get in market open. So this was very important, too short. After this 3-minute, after the 5-minute, I was in right there. Look at that entry. My stop loss was actually up a little higher because I was in 3 contracts. It was like a 60, not a 60 point, but like I had it initially right here at the first presented high, and it was like 40 points. So I was in 3 contracts. I didn't want to lose all my profit for the day, but I was willing to risk a lot of it for this trade, and I exited early because NQ is just, just playing with me at this point. So I wanted to be out of the trade. That's 138 points, 1 to 3.5. And really, your stop, actually, no, this is a safe stop. This is a very valid stop. Even re-entry, like right here on this drop, you could have found a way to get a good stop with this being like your safe stop right there. Something like that is another possible entry if you missed this perfect. In the 3 minute, because I do want to say, trading in the point of reversal, like in the gap point of reversal for our 10 a.m. is instinctual. It's because you've traded it so many times that you know that 3 minute tap CE is going to be the highest high, and you want to be in there because even though, you might have a stop that's up here, that's still a lower stop than like waiting for it to move down and then create a stop up, and maybe you get a fill here and then you want to put a stop at the high, or maybe you want to lower it. Like, instead of doing all that, just enter where the point of reversal is, because it's your model and you trust it to move down. So this was really the TP if you wanted to take it. My TP was right here, which was literally the low of the market. Like I said, the regular trading hours holds a lot of power over the market. And at this time, the cracking correlations to send us lower were daily cycle with YM, 90-minute, and then the regular trading hours, SMTs. But the reason why I took this long was because we had a daily with YM, and I thought that the cycles were aligning us to move up a little higher. And since we got one good model in the 10 a.m. Po3, like, this is a perfect 10 a.m. model. I've said this time and time again. Perfect 10 a.m. model in the OTE. Like, there is nothing better. It like barely went into it, which you don't even need to have like a limit order here. You read it based off of the price and based off of just how the order flow is moving, the movement of the price action on the 5-minute and the 15-minute. Because if I'm looking at the 15-minute for low stop entries, I'm going to look at the bodies and I'm going to look at the highs and lows of the bodies. And look at that. That's our 10 a.m. candle. I had a stop loss, like a little bit of, like, up all the way up here, really. But you could have also went to the 5-minute and put it at this sweep high. Like, this could be your stop loss right here, this sweep high. And you would have lowered it by 10 points. And you can do all these things. But, I mean, let's just look at the order flow in the 5-minute. Look how it's respecting these order blocks. 5-minute fair value gap right here. It's respecting in the bodies. I mean, it's drawing outside the lines a little bit, but for the most part, it's respecting. And if you would have had a stop at the previous highs, then even like entering there and going break even, you would still be able to hold this for longer. And even at this 5-minute right here, holding it, we have an no, we don't have an SMT there. But this is what I mean by using order flow. We're using 15-minute and 5-minute to determine our holds and where to trail our stop, because I'm expecting retraces back to 50% of the range, and that right there, that's higher than 50%. So you want to have your stop, like I've said before, at like 80% if you're going to hold longer. If not, then just exit at the low, dude. Exit at the low. That was 130 points. There's no need to really hold much longer than that. So right here, you see we retraced to about like our 60-70%, which is like very, very likely all the time, which is also aligns with the unfilled fair value gap. The one that's highest away, it doesn't even need to be the highest time frame one, which usually it is, but even the furthest one away is the one you want to use, even if it's on the 1-minute, like something like this. And I actually used that when I was looking at ES because of the difference in structure. NQ had a much bigger range. I mean, it was much higher above our previous all-time high, and NQ like just swept it to create our manipulation for the week. So it was a bit of an interesting day. I definitely saw the thing that made me enter, even though I did take a, not a bad trade, but it was well risked. I could have passed the account on this trade, and so I was willing to risk 200 for that. And this trade was early. I knew it was. I didn't want to even sit in drawdown. I was just okay with exiting and, taking that loss because I wanted to wait for the confirmation. So I saved myself there. Microcycle, daily cycle, in this long, I was exiting based on price. And really, if I wanted to follow my model perfectly for like like an actual funded account and not, or even a live account and not take this long against trend. I only took this because of the confluences in the microcycle and the low risk stop. That's the reason why I took this, because I knew I'd be in profit and I knew I could go break even and take something off the market. After that, the the thought of having more profit got to me, and that's how this loss was incurred. Then impatience for the 10 a.m. model is how because originally this trade, I actually had a stop right here at this high. 66 points for 126 points. That was my 1 to 2 trade that I was looking to pass the account on, or just get close to there. But I ended up getting an even better entry and a lower stop, waiting for the right time. So coming into this X in the distribution cycle, I was expecting the expansion to just sweep and we'd move lower. I kind of thought we would move lower than this and not just chop around, but who knows with this market. So the expansion range after this distribution isn't proving. I'm thinking it's going to expand lower because we had that microcycle Kraken correlation to have our protected high, which was the first presented. After that, it was just easy money. Really, that hold there, and why I exited this was because I had enough profit and I was like $150 away from max profit, and I wanted to just exit there. I didn't really care because I needed to take one trade anyway, and it would be a 1 to 2 no matter what. So that was my exit. I did not wait for this to get hit, but it did get hit right before it just reversed, and you might have just closed it at like much less profit because of that reason. So for that, that's instinctual because I've been in the market for a while. I do often have a pretty good instinct for getting the low of the day or close to low of the day just for exit or the time being, because we can come lower within 2 hours, 3 hours, but I don't want to wait 3 hours to be in a trade, and who does really, unless you traded for that reason and you're in high time frame. So this is the instinctual exit I had, and it was because we were under the low of day for regular trading hours, and really we're likely to come back into the range. Like I said, 70% retrace. We have more 15-minute candles that need to rebalance price and move in between and do all this shit that I don't even want to sit through or watch. I'd rather be off the charts because I saw the 30-minute. It didn't really do that well because it closed right here, and it was just used to be swept for the 10 a.m. Po3 to sell off and take this low and regular trading hours low. That was it. That was the day. So I will leave it at that because it was a simple day. It could have been a really good day for people who entered off of this initial 15-minute CISD, because at this point, True New York is mitigated. We created a DC 90-minute if you wanted to enter on this 15-minute CISD, because we had not a single bullish candle on the 1 minute right here. By all means, and go stop break even before open. True Microcycle opened right here. We didn't even have an SMT at this time to enter for a pre-market short. I'm pretty sure, yeah, we didn't. So that was the big drop that sent us, like, that just confirmed us we were just going to dump for 30-minute PO3. So this was a bearish 30-minute PO3. The bullish long that I took was just a retrace within it, which I thought would be a little bit higher, but it is what it is. I knew it was setting up for 10 a.m. PO3 at the time that I took this trade, so I was just a little impatient. I exited, took the loss I deserved because I was impatient, and I made sure to be on the right side, and look at that. That's all she wrote today. So I'm going to get off for the day, and I hope we have a decent day tomorrow because I will be looking for a single trade, low risk, probably like 3 cons again, maybe even 2, because the volatility is kind of crazy at the moment. So just wait for it, and the money will be yours. Anyways, I will see you guys in the next video. Take care.